have its circle. So there's definitely some of that going on. But I think to Naka's point, regardless, maybe the percentage of coins that go into stables ends up not being as much that goes into crypto, but it is still a percentage. So as the number goes up, it's going to correlate to money inflows. It's just a matter of like, is the percentage inflows into crypto equivalent to what it was 2 years ago? Probably not. I would agree with you. Maybe it's only half of what it was, but regardless, it will still go into crypto. It's just at a lower rate, right?
Yeah. I mean,
Well, here's one for you, Naka. A second ago, it's mildly related topic, but a second ago you were talking about, did you say commercial banks, they're going to have to be regulated to hold US Treasury debt? Was that you, or was that someone else on stage that said that?
I don't think it was me.
Oh, okay. Oh, yeah, it's probably off topic then. I'll give it to the real Shah. You've got your hand up.
Yeah, to kind of help answer that question, yeah, my conviction and what I say is kind of twofold. One is because of historical patterns, and again, as long as the trend is true, then the trend is your friend. And the other thing is because of the Bitcoin's having schedule that also has plays a big part in these cycles. And historically, we haven't seen, in my opinion, we still haven't seen a minor capitulation event yet. We've seen some miners capitulate, and you're seeing also that the hash rate has kind of stayed quite high. It has corrected a little bit, but it's still quite high. And at these prices, more and more miners are going to have to kind of, at least temporarily leave the network, and that leads to other miners to capitulate. So we haven't, in my opinion, we haven't seen that yet. But again, it's a big driver of these cycles. So if you take a look historically, again, right about a year prior to, it's like a year out from the last bull top, and about a year and about 5 months prior to the halving. So I mean, and if you do the math, it's still within that schedule there.
Yeah, I mean, as far as what I can see, minor capitulation is happening right now. Miners are reducing their activity. Some are dropping out. You can see that in the hash rate, the difficulty function, that kind of thing. And like that is an indicator that the bottom is basically not necessarily right then, but it's like it's you're in the zone, right? Like when this happened, in the previous cycle, the capitulation point was the 17th of December, and the price bottom was like pretty much exactly then. Then there was the 15 cycle, which was a bit messier. Miners didn't fully like capitulate, but there was a strong decrease in hash rate. And then the one that like the 2010, 2011 cycle, again, that timed the bottom pretty accurately. And it also timed the local low that we had in 2021 as well. Like again, the minimum of hash rate was within a week or two. That was the bottom. So like we're in the zone, guys. Like we are 100% in the zone for where the bottom should be. We're not necessarily quite there on minor capitulation, but it's damn close, right? It's damn close.
I mean, my highest conviction thesis is that the Fed will continue doing until they break something. Their track record of soft landings is basically almost 0%. So this whole idea of that they're going to get a smooth sailing, the only way that could happen is if somehow there's a Russia-Ukraine truce, they start pumping oil out of Russia to Europe again, inflation comes crashing down, and then that would be the one scenario where we could get a huge pump in equities and a huge pump in crypto.
Yeah, if we wake up tomorrow morning and Vladimir Putin's like shaking hands with Zelensky and it's like, sorry broski, we won't do it again, it's all good, like bears are fucked. I mean, that's it. It's fucking over. You're not getting back in, and you just have to take it. But I don't think that that's going to happen super fast.
But even if it does happen, I still think it would probably just be a bear market major rally, but it might be bigger than you think, because ultimately we're at the end of the cycle. We're at the end of the long-term and the short-term debt cycle. Just because they end the war doesn't mean everything goes back off to the races, but it could be due for a major bear market rally and get everyone long and then just wreck them again.
Yeah.
So we have a couple new speakers up here. Wiz, Sam, and Wealth. Do you guys want to add anything?
Yeah, first time for me to participate. Big amateur compared to y'all, but I keep hearing everyone refer to the history of what's happened. But technology improves, history changes. Miners, for example, miners are now capitalized by borrowing against their stock, by issuing stock. And they're not immune to the issues of electricity and the costs associated with that going up. If you've seen some of the charts showing what electricity rates are doing. So while miners may capitulate, and it looks like we're sort of in the middle of that, I bet you if you could look at the balance sheet of miners, too many variables happening at one time, getting squeezed, having to refinance, interest rates going up. The value of the stock that they borrow against to collateralize their loans is going down, and their energy costs are going up. I think miners are going to get caught off guard, just like anybody who cannot process all of those variables well based on management. That's one thing. Everyone keeps talking about 1929, modern monetary theory, computers, trading breaks. There's just too many variables in place from 2008 until now that we're probably not going to see exactly that. However, if you look at the charts and you look at disequilibrium on the charts between some averages, I like to look at the Ichimoku indicators. There's no historical precedent for the disequilibrium between a Tenkan and a Kijun right now within this last year, even going back to 1929. There is no historical comparison. One more no historical comparison. Read an article on that Seeking Alpha. I shared it with Nock. I sent it to him, and I posted it on my Twitter feed, looking at longer period times of RSI and trying to find the bottoms. I know all these bespoke metrics are super confusing. However, you're really trying to find that intense edge to know when you can get on for that long position and take a 10x. Now, if you look at 102 period, like a two year weekly moving average, weekly RSI setting, if you do that and you draw it out on the BLX, we're in uncharted territory. There is no time from the beginning of Bitcoin until now that the RSI is as low as it is. As they call it oversold. I think a lot of the metrics that people are looking back on and looking at this on-chain data, the least reliable. And I think the trend lines that people say, oh, these people draw these trend lines and they get wrecked. Well, draw a trend line on a higher time frame, a 1 month or a 3 month or a 6 month interval chart. They work 60 or 70% of the time. They're not garbage, but all the people on crypto Twitter who are interpreting them, the vast majority of them are misinformed and poorly misinterpret the charts themselves. So those are some of my thoughts. I just wanted to share.
Can you tell me, because I don't understand Ichimoku, what exactly is the Kijun and the Tenkan, and what do they mean?
They're shorter. The Tenkan is a shorter term moving average. It's not an exponential move average. I think it's sort of like a weighted moving average, and the settings are actually in the indicator. When you click on the cogwheel in TradingView, you can see them. It's like there's several elements to the Ichimoku, but the Tenkan is a shorter term moving average represented in the technical indicator as a blue line. The Kijun is a longer term moving average represented as a red line. And as you see a price go parabolic, that price action will be reflected in a large disequilibrium between a Tenkan and a Kijun. So if it's above the cloud, which is a bullish indicator, if the Tenkan is far, the blue line is far above the longer term moving average, the red line, the Kijun, you'll see what's called a C clamp, a disequilibrium. It's basically like a momentum indicator. It tells you when things are going to break out, and it's very good for spotting those trends, but you're going to miss the first 20%. Currently, Bitcoin on longer time frames is far below the cloud. A reverse disequilibrium, the shorter term moving average is much lower than the longer term moving average, the Kijun. And it's not going to give you the indicator like this is the bottom, this is the time to step in. That's why I don't disagree with using those bespoke metrics. The problem is, what category of bespoke metrics are you using? Are you using a metric which is one that we can all access, that we can maybe do a bit of math and we can follow? There are some people that like to post precious metals metrics. Patrick Kareem, Bad Charts, and he posts the most bespoke metrics you've ever seen. And it's impossible to watch them play out on high time frame. The one thing about crypto is a great equalizer in Bitcoin. You can say whatever you want. In 6 or 12 months, you're either going to look like a star or you're going to look like a complete ass.
Whereas I'm going to look like a complete ass no matter what happens because I've taken both positions.
Well, you mentioned that. you mentioned
That's how
that,
it's done, boys.
why you were vacillating or going back and forth. If you listen to Alf, that macro block, he does that with Andreas. They have some very talented, respectable, traders, and they asked them to give one investment that they would recommend. And they went back and they looked at 4 or 5 of them after they made the recommendation to give the trades time to play out. And some of these are very complex trades I couldn't duplicate as retail. And some of them were proxy trades. And almost every one of them was not in profit. When you say it's a vacillating, brutal time, I think Goldman Sachs posted $1 billion trading loss over the last couple of quarters. Now, if they, with their quants and their computers and all their trading and their experience and all of their resources can lose $1 billion, anybody can vacillate. Anyone could get wrecked. Anyone.
That's true. And I only lost a bit of money on fees, so it is what it is. Yeah, it's true. It's a tough time. I mean, I do think that it's correct to be bullish crypto. Like, that's one thing I believe in. I do think it's correct to be long-term bullish on Ethereum. The macro stuff is tough. I even think it's correct to be long-term bullish on Bitcoin, actually. But yeah, I mean, it's a tough time. Anyway, thanks for answering it. So I guess Ichimoku is just like trend following, right?
Well, there's a very, very short YouTube segment. It's always like short. It's like 3 or 4 hours, done by a Filipino lady who's a fabulous teacher, and she really gives you the fundamentals and basics of it. The person in the crypto space who likes to use it is Josh Olashevitz, Carpe Noctem. I think he taught a class in it. He does seem to ignore the indicator when it doesn't fit whatever idea he's trying to present on a YouTube or in an analysis. But it's an interesting indicator. And by the way, as Josh provides it, he uses amped up double settings. You can YouTube it, Josh Ichimoku settings or crypto Ichimoku settings. Don't use them. Use the standard settings in TradingView. Look at 1 day, 3 day, 1 week, and 1 month, depending on the history of the asset that you're studying. Look at silver. And for example, Cold-Blooded Schiller loves to talk about silver and how he wants to take a large spot position in his latest stream. His reputation of being a decent trader and a good teacher. And he says silver 1850, looks like a good bid, like a spot. If you put the Ichimoku indicator on, all these I've shared on my Twitter feed, it tracks that price action of silver, the rejection of the cloud being red, acting as resistance. One of the problems is this Ichimoku trading indicator system only came to the West. I can't remember if it was in the late 70s or late 80s or the 90s, somewhere in there. So it's not really well accepted and well used and well embraced by many people. But at a glance, I mean, the person who the lore and the story of the person who developed it was a journalist, a Japanese journalist who went off into the mountains and researched it and studied it by looking at charts for, a couple of decades, and then came out and published his results. But I mean, compared to Japanese candlesticks, I mean, it's far more modern than that. And looking at it, it was published in the late '60s. And but
Hey,
looking
Sam,
at it,
I don't
yes.
want to. I don't want to
That's
spend
okay.
the whole space on
Sorry.
Ichimoku, but if you could just
Yeah.
tell us which indicator you like on TradingView, just so people can check it out, because there's a lot of
Yeah.
Ichimoku indicators on there. Which one do you use?
Hold on a second. I'll pull up my trading view and let me just look. Hold on 1 second. If you go to indicators, the one I have says basically Ichimoku Cloud. That's all it says, Ichimoku Cloud. And if you select it, don't do what Josh says. Don't change the settings. Don't amp them up. The settings are 9, 26, 52, 26. And the one cool thing about it is there's some indicators that try to take a forward look at what's happening. Elliott Wave tries to do that. You try to look forward a bit, just enough so you don't get run over by a steamroller or a Mack truck trying to pick up nickels. And it does give you a forward look analysis when you look at the cloud and you look at the resistance levels. And if you just spend some time with it, instead of looking at all of the realities that are right in front of us, you can reconfigure those realities to see a bigger picture of what might happen. And if you apply it to the SPX or the Dow, the targets, looking historically at what's happened since, say, 2008 and 2000, people say 3,000, Mr. Blonde. I don't think Mr. Blonde talks about Ichimoku, but the targets look more like 2,500 in the low 2000s. 2,900, 3,000 is a very mild target. If you look at that Ichimoku indicator, look at the historical pattern that happened in 2008, look at what happened in 2000. It simply doesn't support such a mild grinding correction. In fact, if you look at the indicator itself and you look at the cloud pattern, the level of support, it looks like in the final quarter of this year, there's going to be some serious price action happening in the stock market with a major downturn, if you look at the indicator. But that's just my opinion. I'm just a retail person that learned all this crap on YouTube.
Okay, cool. So you're using the Ichimoku that's actually default in TradingView. It's not made by somebody. I'll check.
Yep.
I actually have a trading mentor that's been on Wall Street for like 25 years as a trader, and he uses Ichimoku along with Tom DeMark indicators, and he's been like a top trader. So I definitely know there's some value in Ichimoku. I just haven't put the time into it, but I will in the future. That's just not what this whole space is about. Go ahead, Journey. Looks like you want to say something.
Harrison, just wanted to say thank you for having me up. Knock, I'll talk to you soon. Be good, guys. Thank you very much, Harrison.
Appreciate it, buddy. Appreciate it.
Take care, Naka.